In 2017, investors expected strong growth despite political uncertainties. To date, equities are up double digits, and bonds have grown between 4 and 6%. Will markets continue to rise, or will political uncertainties drive market volatility? We spoke with Citi strategists on their view for the year ahead. Julia, China's strong growth in the first quarter of the year was important to stabilize the global economy. However, with rising concerns over Chinese growth momentum going forward, what's Citi's outlook for the global economy?
I think we see a fairly benign environment with broad-based growth at around 3% globally. The developed markets, I think, are predicted to grow at about 2%, and there's actually risk on the upside for that forecast. We could do better. For China itself, we're expecting 6.6% growth. The government is taking a lot of measures to internationalize and stabilize financial markets, both in equities and bonds. And with the 19th People's Party Congress coming up, we do expect a real focus on stability.
Equity markets have rallied and hitting record highs in the US and the UK. Are there still opportunities for investors going forward?
I mean, certainly from a valuations perspective, it is really hard to argue that the US and UK offer good entry points here. We do think there are better opportunities elsewhere. Broadly speaking, we like emerging markets. For instance, a market like India, where our government has been taking a lot of measures to internationalize and simplify international access. In Eurozone, the balance sheet repair continues. And from a sectoral perspective, we do like financials, energy, and tech.
Umar, what bond opportunities can investors consider?
Well, we are constructive on the emerging markets, given that we see the carry as relatively attractive. While there may not be that much upside to spreads at current levels, we do feel the asset class will remain well supported by healthy investor inflows and by improving fundamentals. In addition, we feel the commodity outlook being positive is a relatively supportive factor, although there are some pockets of political and geopolitical risk in the emerging markets. And away from the emerging markets, we also like the European financial space, where despite a meaningful rally, we still see some value in spreads.
Jai, what's the outlook for the US dollar? And which currencies do you see outperforming in the next 6 months?
Range-bound, but with more volatility in the dollar. That's the key going forward. The longer-term dollar positives are still in place. The fact that the dollar has virtually priced out the Trump economic agenda, which we expect will come back into play. The issue is in the near term, we have political headlines and a market that has marked down inflation expectations in the US, albeit transitory. Those are keeping a lid on the USD. Now the euro stands to benefit from this, as the markets are now expecting the European Central Bank to start communicating about tapering its quantitative easing program by the end of this year. But there are limits to how much the euro can gain, given that actual rate hikes will only start in 2019.
What's the outlook for Asia-Pacific currencies?
The Australian dollar is going to continue to be undermined by weak economic fundamentals and lower base metal prices. When we talk about Asian emerging market currencies and the Chinese renminbi, we are looking for more stability for the rest of this year. High-yielding currencies like the Indonesian rupiah and the Indian rupee that offer more attractive carry are going to be seen in greater demand against a currency like the Singapore dollar, which offers low yield and where the central bank continues to retain an accommodative monetary stance.
We hope you found these insights helpful. For more information, please speak with your Citigold Relationship Manager and ask for a copy of the 2017 Mid-Year Outlook Report.